The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Wednesday, Friday at 11 o'clock till noon. And of course, as always, Steve Rhodes kicks off here at TFNN right at 9 o'clock Eastern Time. Fabulous show. Then joined with Tom O'Brien, another great show, 10 o'clock till 11. Tom will be on CNBC with Brian at 2:10. This afternoon. Why am I suddenly blanking out on his name? Brian. Anyway, at 2:10 this afternoon. So stay tuned. 2:10 this afternoon Eastern Time. You'll see Tom O'Brien discussing gold and whatever comes up. And I believe it should be right there. You know, they say 2:10. It might be a little after, but somewhere around there. Brian Sullivan, thank you in the den. What a wonderful medium, always helping me to fill in the blanks. So this is what we're looking at here. We've got overnight, of course, the French results were not, they're kind of what everyone anticipated. Sarkozy did not get in. And now what's really important about this is that it isn't so much that he didn't get in, it's what's going to happen. So the futures just went, they opened down 10, and then they went minus 15, then minus 17, and they tried to rally back, and then went back down again. And then all of a sudden this morning, around about 6:30, they started rallying, and they went all the way. The E-minis went from 1340, what was it? Let me just move it over here. I'll tell you right now. That is the 120-minute chart. There, look at this beautiful arch formation. There's a left side, price side, time match at 1361. It goes all the way around, goes to 1411.75, the E-minis, S&P, and then plummets down last night right through the 1361. It stops actually at 1363.75 Friday. And then gaps down and goes 23 points low. It goes to 1340. And now in a straight line move. Nope, it's not a straight line. This is actually peak B being made, or leg B on the upside. A rebound back into the very critical time price range that it was in, the 1371 to 1361 area, which is really key support. Very important. Now, I would have loved to have seen everything happen, not at 6:30 this morning, but at 9:45 to 10 o'clock. I would have loved to see that retest of the lows, and then intra-morning, during the live session, get all that bearishness out the way at the opening, instead of waking up and saying, oh, ho-hum, the S&P futures is only down 4, not knowing that they were down 17, and then having this fabulous rally coming all the way. But you realize 1340 to the high that we made just a very short while ago of 1366, 26 points. 26 points is what you get in a week. So that is really a good comeback. Not good enough, in my opinion, just yet. And I'm going to explain what I'm looking at. I wonder if I should go. Yeah, I'll go through the numbers. The Dow's down 28 at 13,009. S&P's down 1.85 at 1367. Comp index is up 1 at 29.57. Gold is down 9. Still don't see anything in gold. 16.36. Silver's down 60 cents at 29.83. Actually, remember the other day we were talking about the left side, right side price time match? Bam! Gold went right through that low. Tried to bounce back, and it's still acting quite weak. Now, what's really important is that we've got platinum's down 3 again, 15.23. High-grade copper is trying to stabilize at 3.72. Must hold the 369 area because, sliding below that, it's not going to be very good because it'll target 365s again. Crude oil down $1.69 at 96.60. And bonds are only up 3/30 seconds. The dollar is only up 10 cents at 79.60. I say only. Let me explain why. I'll just jump to these charts right here. The SPY has a pattern that has this left side, right side arch formation, that says it could test 135.94. If there's a reversal of the rally today in a 120-minute chart in leg D down, but the stochastic, which is flat at 5%, that's not showing any energy at all. So it's ready to pick up steam. You need to see the SPY, that's the S&P Depository Receipts, power higher, breaking the downtrend diagonal wedge resistance at about 137.40, and by tomorrow afternoon or Wednesday morning get to the 138.20s to really say, this is just that rotational aspect that I've been talking about for so long. I'm going to go through that in a moment as well. But in the meantime, what we're looking at is the 120-minute chart says, nice rebound. The daily chart, this is nothing. What we're seeing right now is kind of pathetic after the big move down in the SPY on Friday, especially if you take into consideration the recent high, and I do have to put a down arrow right here because the MACD did cross underneath the slow-moving average. There you are. So from the move of 139, was it? No, 141.66, plunging down to today's low of 136. I mean, that's a pretty big hit. So this bounce, and it has to be a bounce that garners upside potential, strength, and that can only come from if the volatility index, which is at 19.28, it ran to another leg up in the 120-minute chart. But what I've been saying, and this is what I stressed last week, I was discussing it, and I said, if the volatility index, which is now broken out of its down channel in the 120-minute chart, and can spike into the 21.5, 22s, if it gets into the 22s, there's no way this market's going to be able to support a rally. It's going to pull back. It's going to pull back pretty sharply. That would say to me that the Dow would take out the 12,008, was it 7? 12,845 low of the 23rd of April. Then that says on the 120-minute chart that we've come down slower so far than when you went up. In this environment, that is an impressive thing to do, number one. Number two is, unless the Dow can decisively close into the 13,090s today, it really needs to garner energy. I have to tell you that although I'm talking about a rotational correction, and when I was asked last week if I saw any signs of a smash to the downside, and I was talking about the Dow, I said, no, I see a correction that if certain levels are held, if the 12,900 area is held, it could go sideways and use up time. If that's decisively taken out, you're using time and price. And that what I needed to see was a push into the 12,000. Really, you need 12,000. Let me just double check here. I don't want to give an inaccurate number. INDU. Yeah, you really need to see a move into 12,190 to 12,200 to say, hey, this is just that rotational correction. There are still, remember when I was talking about the scales of justice? On the one hand, you've got the shorts, the stocks in sell mode. On the other hand, you need just key stocks that are showing enough strength to be able to mitigate that downside move. That uses up time for your consolidation. And that is another one of those corrections. So remember, you've got three ways of looking at it. You can either smash to the downside with two consecutive triple-digit down moves. That's what I look at as being really a confirmation that you're in a sell mode. Not just a sell signal, but a sell mode. And that would probably be in the weekly chart. That's in the Dow. Two strong triple-digit down closes, that is. Or there is a sideways move where you have the first smash to the downside, and then you make that very familiar rectangle formation that we've been looking at for some time. So you use up time, and then there might be one slip below the support level, whatever that is, and then back into the rectangle again. That uses up time. Or, and now this is something I have to be aware of, it is a possibility. And I'm going to make a big deal out of it because it's based on the trend. Yeah, the dollar is important, but it's the trend. I mean, the volatility index, the VIX. That VIX stays under 20. It is really good. If it powers into the 22s or higher, we're going down. It's as simple as that. But most importantly, what I want to look at, the other scenario is we start a different kind of a move down. It is a different kind of a bear market. It is the bear market that we saw in 2007 when the monthly chart started to look like a crash scenario, but you never saw it in the daily. The daily kept looking like it's just making lower highs and lower lows, lower highs and lower lows, lower highs and lows. Just kept doing it over and over. But there was no crash chart formation in the dailies, and it was very deceptive. But that monthly had a fantastic mimic of the 1987 daily crash, the 1987 London, the FTSE chart pattern, the Nikkei back in 2000, that the long weekend that's closed 1999 started 2000. Was it 2000? No. 1990. I'm sorry, back in 1990. That's the chart I was talking about when it went to the 37,000s. So chart pattern wise, the daily is not looking that great right now, but we were saved early in the morning from a really sharp opening down with probably even more intensive selling. So that's what I wanted to show. Now, so I showed the Dow. The Dow has strong 13,119 resistance. If it can get to the 13,150s in the next 2 days without breaking, I'd say without breaking 12,950, 12,900, that'll be very important. That'll say that sideways action is continuing. Why? Because the weekly, now this is what I also mentioned on last week, that the weekly chart technicals were very poor in the Dow, but it did make the oval pattern, the oval pattern, and I wasn't sure whether this was a neck that would extend that leg E to 13,338. Why is it not there? 13,338. Yeah, so that says that the oval pattern is still very important, and that makes the low bar on a weekly basis 12,710 absolutely key to hold over the next, I'd say, 5 to 7 trading sessions. Monthly chart, this is the other thing that I spoke about. Leg E, but the S&P, you remember that pattern that I've been talking about for some time, that I've developed a technique that says two bars in a monthly chart, especially the D or an E, that has the second bar just fractionally lower. Remember back in, we made 1364.56 and 1370.56 back in April and May of last year. So that was higher, and you did pull back. But the thing I'm looking at here is the 1419.15 high of March and the 1422 high of April. Oh, well, there's the thing. 1419.15, you made a higher high. Okay, so that's not the pattern. I thought it was there. It was being covered by a letter. All right, we'll be back, and we'll be back with Mike in New York straight after this break. Dow's down 32, S&P's 0.46. Great action, but not exactly what I wanted. I wanted to see the volatility index spike and then pull back sharply, the trend spike and pull back sharply off.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. I better just do this right now because I've already forgotten once and I've written it down and I'm not holding up my book to always remind me. I'll be talking for the Investors Business Group over at the meeting's always at MIT. And I think it's building 351. I think it is. Anyway, if you Google Boston Investors Group, it'll take you right there. The meeting starts at 7 o'clock tomorrow night. And I've been a frequent guest over the many, many years. And this is going to be a most appropriate time because people will be asking me, I'm sure, about stocks that we probably will never be able to get to here just because of time, etc. So if you want to come over, I'm really looking forward to it. It's a great group to talk with. Just a very knowledgeable. A lot of people are actually fundamentally oriented, but many people now are becoming more and more technically oriented. So it'll be tomorrow night at 7 o'clock in the Cambridge area over at MIT. Let's go to Mike in New York. Hi, Mike. How are you?
Good. How are you, Basil? Good morning.
I'm very well, thank you.
Okay. I'd like to look at Dick's Sporting Goods, DKS.
Do you have a position in this?
Oh, no, I have no position, but I noticed it just went under the 9 EMA on the daily.
Correct. So now this is exactly what I was talking about. Well, the symbol is DKS. It's trading at 50.38. Dick's Sporting Goods. How stocks... I've been talking about this for so long, how discretionary income stocks, the retail stocks, have done so unbelievably well with the CMG, Chipotle going to unbelievable. You've got so many stocks now in the 300s, the 400s, the 500s that I consider to be discretionary stocks. I've been around a while. I've seen recessions. I've seen really bad recessions. I remember the 74 to 73 to 74, 50% decline in the Dow. You know, I just don't remember seeing discretionary stocks move like this. So something's going on, has been going on. Now I think they are looking very tight, and that's the thing that means a lot to my work in the overall concept. So when I talk about the technique that I've been developing for, it's at least it's about 8 months now, and I usually like to use these techniques for quite a while before I officially inaugurate them. The technique that I was speaking about of the monthly chart, I'm finding now it even works in the weekly and even daily charts, but my work has been on the monthly so far. So let's stick to that. When you get two bars going to peak D or E, it can actually happen anywhere, but the most important is when it goes to a D or an E. I have to be looking at it very closely, because if in the second month, that is the bar after, say, a new high, in this case 51.58 in April, if in May, and after all, Dick's in the summertime, you would think that the summertime would be very good for sporting goods. Maybe not, because the schools, of course, do a lot of buying, so maybe they're involved in the wintertime. But 51.58 is the high in April. So far this month, 51.49, 9 cents lower. I'm watching this really closely because just like I spoke about the Dow and the S&P, having given me no signals in the monthly chart as to a pullback other than the unbalanced volume in this case is way lower than it was when it made its peak D, and this is now leg E slash B on the upside. So back in May of last year, the unbalanced volume was quite a bit higher. And that says to me, okay, you got to be careful. Keep watching this. The weekly chart is turning down in the MACD, but the fast-moving average is turning down. But if you're looking at Tiger TV, you will see that turn down is, in fact, it hasn't even come close to crossing negative. That red line is the slow-moving average. There is a turnaround in the weekly chart because the week's just begun, but from last week in the unbalanced volume, that's the green line, and the stochastic is lower, but still at 93%. So now this is going to be very important, because if you look at enough charts, you know that the short term is what leads the intermediate term, which in turn leads the longer term. So I have to look at this and say, okay, here's the daily chart. The daily, as you say, closed Friday under the 9 EMA. Today ran above it. The day is young, not even 2 hours into it. Yeah, 2 hours into the first session of the week. And what I'm looking at is that so far it ran above the 9 EMA, but right now it's just under the 50.35 area. Is at 50.33. The MACD is turned down, but it's sort of flat. But it has deflected lower for the second time, and each time it's done it, it's given quite a bit of a pullback. Now, I say a bit of a pullback. I'm only talking about from 50.79 to 48. So 3-point pullback before, and this last one is 51.37 to 49. Yep, they're going 3.5, 4 points. So the stochastic is lower. So what I'm going to do is I've done a little work on the 120-minute chart, and I'm going to explain to you exactly what the parameters are in Dick's and what you might want to consider, given that you might be able to put two positions on with tight stops in either one. So I'll be right back with Mike in New York looking at DKS. Dow's down 37, S&P's down $1.20. Trying to come back. Day's young.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D-point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today, because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. And let me just remind you two things. Tom O'Brien, 10 minutes past 2, CNBC. And this is where he's going to be interviewed by Brian Sullivan. And that should be a wonderful interview, as always, with Tom. And I'll be doing giving a talk tomorrow night for the Boston Investors Group over at MIT. You can get all the details right if you Google Boston Investors Group, I believe it should be, and it'll give you those details there. Starts at 7. I'm not sure what time I'm on. And a couple of other things, and we're going to go right back to Mike looking at Dick's Sporting Goods, but I just need to get this. There are a couple of things that I've been wanting to talk about, and I hope I'm going to be able to start doing it today, and it's about the 1%ers. I believe that the real 1%ers are the folks that are getting these incredible pensions from either state workers, federal workers. When you can work your last 3 years and do overtime, anything's called overtime, and you can sometimes double your salary and then use those 3 years. You tell me who the 1%ers are. Find me someone tell me how much money you need to, after taxes, to make 70, 80, 90, 100, 110, 120,000 per year with medical expenses, absolutely without a worry in the world, because it's guaranteed forever until you die. Those are the 1%ers, the wrong people, not the extravagant prices, 15 million for just a kind of a bonus that some CEOs get, or whatever these incredible amounts are. I'm not talking about that. In fact, they are much rarer than the number. I'm doing. My wife said to me, "Do some research." I started doing research. I'm going to do a lot more. I want to look into that, because that is what's going to cost government. All right, back to Mike with DKS. So, Mike, this is the story. Got that off my chest. This is one of the things. The other thing I wanted to talk about Facebook in a moment, which I will do. Dick's Sporting Goods. The up channel made a peak C, and then fractionally lower peak C2. So it's C1, peak C2. And then again fractionally lower peak C3 with the technicals failing. In the 120-minute chart, going into, let me look at this. This is from the 27th of April. When I look at the daily chart could not, the MACD keeps fading. The fast-moving average keeps slipping underneath the slow-moving average. The stochastic is now way down at 70%. So my suggestion is, even though there could be a pop-up, I'm looking at this really closely to see if Dick's Sporting Goods isn't telling us, be careful in the RTH area, in the retail area. Let me just jump over to the retail, the RTH. Well, that's leg C, in the monthly, D in the weekly, A, B, C, either E or D in the daily, E or C. So, okay, I'm going to keep that in mind. This is my recommendation. I think that the upside right at this particular moment for Dick's Sporting Goods is somewhat limited. I would be looking at a small position as a short. One of the reasons being, it might use up time by bouncing to the upside. You can see already today, tried to rally, hasn't been able to hold. But two things, you could start a small position at 50.32 right now, and you could start another position above the high of today of 14.83, and the entire two small shorts could have a stop at 50.95, the high of Friday. Why do I say that? Because if it starts to fall, if later in the day the market, in fact, instead of rallying up 45 points, suddenly slips another 45 points to minus 70 Dow, another 5 points in the S&P to minus 575, that's going to be like a failure as far as I'm concerned. Because we've used up the energy that we should have been. Right now, we actually should have been up about 30 points. So my suggestion is two small positions, and I might be wrong, but I've got a Gartley, might be a butterfly, in the weekly chart, but I don't want to jump the gun. What I'm saying is that I don't have a sell signal in the weekly chart yet, but if on Friday at the close, Dick's Sporting Goods closes below 48, it's at 50.36, that would signal a timeout is coming, and possibly price if the following week it breaks 46 to 45 support. So you'll know you're wrong, because this thing's going to go jump and it's going to bounce to 51.40, and it'll say, okay, could do a retest of the top. We'll have to watch that closely. But that would be my thinking right now. Hope that helps you.
Basil, May 14th they report earnings, so.
Oh, May 14th.
So we'll know.
Yeah, definitely. Oh, absolutely. Oh, well, it could even run a little bit higher into the earnings. I don't know. Anyway, that's the way I'm looking at it, and I'm very comfortable with that analysis, because if it does break into the 51s, you don't want to be short. You just want to be holding and waiting. Thank you so much for calling, Mike. And that's a good question on that. So, folks, we're looking at DKS. Now, the EUR, USD, I'm jumping around the markets again. I will be doing Larry's show. Larry is there. He's right there. But he's just lost his voice. His voice hasn't come back. Or it did come back and it's lost it again. So I'm going to be doing this show. Hopefully Larry's able to post a couple of charts into the Dan and mention a couple of things, type it in. And I will I'll repeat what he's saying, because I know a lot of you are waiting to hear Larry, and you've been a little disappointed having me, of course. But Larry, I'm sure he's going to be back very soon, so I'll be doing Larry's show. Now look at the EUR. When I was discussing, we had a caller the other day, and we were looking at the 1.29 as a test in the euro. Well, look what happened. And I discussed the arch formations, and that it had made a very quick peak D in the ChapmanWave. Let me just explain that. In the ChapmanWave, you can go from a low bar, most identifiable low bar. This is the low bar of the 16th of April in the EUR-USD, euro-dollar currency pair. And it went from 1.30898 1.299, and it rallied all the way to peak A. That's a peak on the 17th, a higher peak on the 20th at 1.32, a higher peak on the, what was that, the 27th of April at 1.326, and then within a day, it makes another high with a doji candle. It's actually now 2 doji candles. For those of you who have been to my seminars, my Master Trader series, you know that I talk about the silent doji. So it makes a silent doji, and on the 1st of May, it hits 1.328, and then it comes straight down. When I say straight down, that's speed. And it comes all the way down and makes a new, not a recovery low, it's not a recovery, anti-recovery low, and goes to today's low of 1.295. Now it's bouncing a very nice candle so far. Stochastic doesn't show any signs yet of turning around, so the price is going to have to lift, has to buoy the stochastic. MACD has got a very narrow turn down. That is actually so far a big positive. It'll become a big negative if in the next 2 days the euro breaks under today's low, closes decisively in the 1.28. That'll be a big negative. But so far, another arch formation with a bounce. The weekly chart, see, this is the same thing that we've been looking at, but upside down, where it hasn't failed yet in the weekly chart from the 1.262 low of January of this year, and it went to peak C and failed under the 200-period moving average. So this, in fact, it's possible that this could set up a trading band as long as the low of 1.287. The low of the week of the 27th is not taken out. From the way it's looking, it says it pretty much could be. And the monthly chart has a big arch formation. So far, this rally is just kind of a pathetic leg A up, peak A up, smallest peak A we've had, since going back to June, July, August of 2007. Now, that takes me to the dollar. Because you remember, I've been making a big deal about this. I'm saying I believe there's some kind of a rally going on in the dollar, but you can't see it because I think that the Fed is trying to push it down, number one. Number two is it's gone from a trough at 72.70 in the monthly chart back in May of 2011 to 81.78 in January of 2012. That is a pathetic rally. But unlike the other rallies where it spiked up and then came tumbling down, this one has used sideways action for 4 months. It's the first time that the dollar has actually done that within a narrow trading range, holding the 9-period exponential moving average for quite some time. See, I'm trying to put this together, and that's why I'm saying you've got to be selectively long if you're long, but there are more and more and more shorts that are showing up, and I'm looking more to short than to go long in this particular period, but selectively. And that dollar says that I'm talking about the volatility index, the VIX as being key, but absolutely the dollar will spiral and it'll go into the 81 area if the VIX goes to 21 or 22 and the Dow goes decisively under 12,000, I'd say 12,850, and the S&P goes underneath 13,000, say 47. Then I think, I believe that the consolidation will become more of a lower highs and lower lows format that we're looking at. So I just wanted to do that. Now the TLT, very important. The three bears, VIXI, Bondi, and Dolly. So we've looked at the bonds, Bondi. We've looked at the dollar, Dolly. And now we're going to look at we didn't look at Bondi. We looked at the VIX. Yeah, we looked at VIXI. Now we're looking at Bondi. Now, bonds went to a higher high. No, they didn't. Yes, they did. 118.46 sets up a leg F/C. I spoke about this on Friday, I believe it was. And what I said is, I'm going to have a parallel wave count, and my bias is actually to call it not F but C, because because bonds have held so well so far, and Larry's just posted the Treasury note. I'm going to fix it up so that I can show some of his charts. during his show coming up in about 20 minutes. And he's got 1.33 as a, what is that? 1, 2, 3, as an extension to the upside. So let me just show you here in my bond chart. A lot of this is coinciding, which very often happens. So here we go. USM 12. Yeah, I've got a leg D in the daily bond June contract. It went from the trough of the 19th of March. It's gone peak ABC to a D on the 16th of April, and then it had an instant restart. That's ChapmanWave technique. An instant restart with a brand new buy mode, and it's gone to leg D. Very often when you get an instant restart, you can go E and F, which says that we are very close. We might be close in time to some kind of a pullback, but if it extends higher in the next 2 days with a peak and another new high, that says it could go even higher. And this would say that at 144 and 1930 seconds, the high of 144.23, the high of December, will be the target if it turns out over the next week that the market pulls back and bonds actually push into the 145s. All of a sudden, you're talking about that whole 144.23 to 143, I'd say 10 area, as being very important because it could turn into support. So that's going to be very important. I will talk more about it when I do Larry's show, but I just want to mention we're going to relate some of this together. Now, we've got a question. I have a question. Would I look at Verizon? Verizon has made a peak D in the daily chart. VZ is the symbol, is trading at 40.45. Now, this is going to be very important because there's a pattern that's becoming very familiar. It's this sort of a rectangle cup formation where the price spikes a tad higher. You remember what I was talking about the euro as a support? We've got the same thing in the chart pattern. This is leg F/C in the ChapmanWave in the monthly chart for Verizon. No signal yet in the monthly of a turn down. The weekly chart is running very nicely, but it's only 76% in the stochastic, in an uptrend in the stochastic so far. And the weekly chart MACD has expanded nicely. So as a defensive stock, Verizon very often does very well. Not defense, but defensive. Meaning it's a stock that fund managers tend to go to because it should hold up better in, yes, correct, MMS. We've got that W formation. Now, what we're looking at in the Verizon chart daily is if, in fact, and I'm looking at this stock plus another one that we have in our portfolio, which is actually holding up okay today, considering there's also an industrial. But there are, in the rotation through different sectors, dividend-paying stocks and stocks that have the potential for a little bit of a pullback, but a much greater upside, are stocks that are on my agenda here for my subscribers to be looking at. Because if you can get a dividend with very little pullback, that is good. But if your pullback is very deep, then what the heck's an 8% dividend or 5% dividend when you're going to pull back in your capital 15 or 20%? So Verizon, I'll finish up with Verizon because it is a very important stock when you're looking at this particular time frame, this particular phase in the market. So I'll be back. We're looking at VZ straight after this. Basil Chapman, 877-927. Dow's down 35, S&P's down 1.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi folks, Basil Chapman, Tiger Technicians Hour, and I will be sitting in for Larry, and Larry's going to be posting some charts in the den, and I'm going to be discussing them. I hope I can turn them over and push them into my camera file here so that you can actually see his charts, and I will try to explain what I'm looking at in relation to what he's been talking about. So the Dow is down 36, S&P's down $1.19. Don't forget, after Larry's show, you got this afternoon, you've got Tom O'Brien 210. On with at CNBC, on with Brian Sullivan, and then 3 to 4, of course, fabulous show with our technical guru Dave White, and then 4 to 6, Tom O'Brien will be wrapping up. And for the next show as well, 877-927-6648. That's the number to call. Let me just go through what I'm looking at here. Verizon acting very well. There's a particular technique that I call the falling axe. It really looks, it's a descriptive thing. It really looks like a straight line up, and then what you do is you get lower highs and lower lows. And if it forms that particular pattern, then it breaks out above the resistance line like a cone facing down. If it can, in other words, if Verizon is able in the next 2 days to get to the 40.66 area, oops, not 40.66 area, It's at, wait a minute, it's at 40.47. Yes, the 40.66 area to 40.72. That'll say, great, it can now retest the previous high of 40.84, and then there could be a measured move of about, in this case, it would be about a point and a half. Yeah, about a point and a half to the upside, which could take it to the 41.20 area, and that's just enough to extend this leg up so that the peak that was made last week extends, and I'm not sure whether to call it, I'm calling it no, it's E/A right now, and E is going to be my preference. And in the monthly chart, F/C, just at a fantastic, this is at not all-time highs, but it's at most recent highs since 2008. The last high, major high, was 46.03. So Verizon is looking good. Where would it fail? If at any time this week it takes out and closes the low of today, 39.85, be very careful, because then that could portend a retest of the rectangle 38.76 to 37.30 area. So we wanted to get that out of the way. Now, what I'm looking for, just wanted to be very clear. Let's just try, what have I got? I've got a couple of minutes. In the Dow, a close today that gives away all the gains that were made from the lows, and the Dow closes, this is at 12,998 towards the 12,920, but under 12,900, bad. Not good action at all. That would negate all the strength, I'm sure, and even the stocks that are acting quite well right now, and I would not want to see that. Number one, I wouldn't like to see it. Number two, it would portend a test of the wick of the candle, that's the Roman candle, wick of the 23rd of April, down at the 12,845 area. What would be positive? Positive would be not just holding well. Positive would be a late 10 past 3 in the afternoon to even 20 past 3 in the afternoon, sudden rally that includes General Electric, General Motors, United Technologies, Triple M, and the other side, Apple, and I would even say Panera Bread and stocks that have been great that are looking very weak right now. So if they included, I want to see the Dow by Tuesday afternoon, Wednesday morning at the 13,000. I've been saying 13,190s. 13,150 to 190. It shouldn't be a big deal if there's a major reversal here, but it needs to clear the 13,118 9-period exponential moving average resistance. S&P will do that, and then I can go to all the other indexes. The S&P has got a more formidable chart. It went to a peak D in a very quick run-up, came back down. Remember, the Dow went to a peak F. That's very unusual in such a short time frame. If the S&P takes out 1358 to 1357 support, closes in the 1356s in the next 2 days, bad action. Weekly chart gets more negative, and the Qs right now, the Qs are at 64.88, trying to rally. Qs need to get to 65.90 to 66.20. Close under 64.30, very negative. I'll be back for the next hour doing Larry Posavento's show and David White show's Power Trading Hour 3 to 4. Then Tom O'Brien wraps it up. Be right back.